This is James Hirecheck with this week's report on the euro, crude oil, and gold markets for Autochartist. I'm going to start out this week looking at the Brent crude oil market. You can see that earlier in the week the market tried to break out to the upside, and this followed a bottom that was put in last week on June 4th, and we had a series of higher tops and higher bottoms, a test of this particular low, and then a attempted breakout to the upside. This came at a time when over the weekend Europe had been celebrating because of the possibility of a bailout of the Spanish banks. So at that time more liquidity was going to hit the market, and that made risky assets more favorable. That included equity markets, metals markets, crude oil markets, and even the euro. So in this particular day we did get a technical breakout, but the market did fall back inside the triangle pattern and actually did trade a little bit lower and making another attempt to break out before moving sideways. Now late in the session on Thursday, the market began to strengthen again due to positive news coming out of Europe regarding central bank activity and the backing of the euro ahead of the Greek elections on Sunday. So we have a pattern here that suggests the market is developing a slight bias to the upside. However, we just have not had that follow through yet. That's why you should always use protection when trading a breakout. If you are trading momentum, when the momentum shifts, you're usually exiting the trade. If you're turning it into a long-term trade, then of course you have to get in near the support points so you can take advantage of the swing. So right now this particular crude oil contract is indicating a sideways market, although there's a bias to the upside because of these higher bottoms. That was based on the 60-minute chart. Now looking at the longer chart, the 240-minute chart, see basically the same pattern, that we have this bottom in here followed by a short covering rally, a test of the low, and this is where the new buying actually starts to come in. The first move down here usually starts with short covering. The second move here starts with fresh buying. And again, because of that scenario last weekend regarding the Spanish bank bailout, the rally failed and the market subsequently sold off. You can recall we saw a similar pattern in the stock indices and also in the euro market. Now that we're establishing a base here higher than this previous bottom, we could start to see a higher market from there. The other thing to note is that when you do get these spike type bottoms, they tend to shorten the move, but when you have a base built, they tend to provide good support for a stronger rally. So although this pattern may be obsolete at this time, we should note that there is still a higher bottom formation taking place in the Brent crude oil market. As we approach, that was earlier in the week. Now as we approach the market later in the week, on the 12th, we started to see a channel down formation form on the 240-minute chart. This pattern too suggests that although we have some sloping support and some sloping resistance, that this market is moving sideways, could be forming a support base, and you can see from this chart that there's plenty of room to the upside before it reaches the resistance point. So I still think there's a bias to the upside based on how this market is responding to the breaks and how it's responding to the support points. The other crude oil contract to watch is the West Texas Intermediate chart. After a hard sell-off earlier in the week, the market seems to have stabilized, and you can see that this contract is showing a lot more strength than that Brent crude oil, that we've actually seen a rally off of this support point, off of this down-sloping support line. Saw this support base being built in here, and finally late in the session we started to get a breakout to the upside on the 14th of June, and that is based on, again, rumors that the central banks are going to intervene to back the euro after these Greek elections over the weekend. And that's putting a positive spin on all commodities and on equity markets and pressuring the US dollar. So if it proves to be true, we're likely to see this crude oil market, West Texas Intermediate crude, rally back up towards this 85.50 area. And depending on how strong the momentum is, we could see a breakout through it. And taking out this resistance could lead to a test of this former resistance point at 86.69. And these swing tops here are potential breakout areas also. So things are starting to look a little bit more bullish in the crude oil market after some seriously choppy trading conditions. You can see very volatile rally up, very volatile breakdown, another rally up before it finally settled down and began its new move to the upside. Most traders prefer to trade these slow, steady grinds that are higher. Rarely are you able to trade these highly volatile markets. So this is actually a good move for bullish traders to try to take advantage of. So again, look for a test of resistance in WTI or West Texas Intermediate crude, and watch for a possible breakout if demand for higher risk assets continues to grow. Looking at the gold market, we see that about the middle of the week we started to see potential breakout through this key level point up here at 1631. Now we've been forming almost a box formation since bottoming underneath this 1548 area. And again, like the crude oil, it's been very volatile up and very volatile down. And finally, you start to see this steady higher top, higher bottom grinding market. And those often lead to volatile breakouts. So with the support base building here and the market showing a bias to the upside, it looks as if we could challenge the 1631.7 area tomorrow, and it could break out to the upside and challenge this recent top. Since they didn't spend a lot of time up here on this top, the market's likely to break through it if it gets enough upside momentum. And what could make gold move higher? Well, again, we're talking about more liquidity being added to the market by the central banks over the weekend. That would weaken the dollar, drive the euro higher, drive up demand for higher risk assets, and that could prove to be the support that the gold market needs. Since the news was announced late Thursday afternoon in the U.S., the market certainly has shown a bias to the upside. So it looks like it's responding positively to that news. It's just a matter of how strong the momentum is and if we can get some rising volume on the breakout. Those would be two clues that strong buyers are coming in. We also have on the 30-minute chart, same type of pattern developing, except this one is showing a breakout around the 1627 area. So again, the same scenario. After you get these volatile moves, you start to see the market settle down and start to develop a series of higher tops and higher bottoms that are now putting the market in a position to break out to the upside. And again, I can't emphasize more the need for momentum coupled with rising volume to help support a breakout through the 1627.20 area. So if it breaks out on the 30-minute chart, it's got potential to move into the next highest zone and break out through these previous top. So there is room up here if it gets the momentum and the volume it needs to support a rally. The last market we'll look at is the euro. And this one started out the week very positive. Saw a support base being built since the 1st of June in a series of higher tops and higher bottoms that were counter trend. If you remember, we've been in a very steep downtrend in the euro. So when we had this bottom made here, size of this candlestick shows that this was a major reversal when this bottom was made. It attracted follow-through buying, and we continue to see higher tops and higher bottoms, which meant that buyers were supporting the market on the dips. Now as we approach the top of this triangle here, the market gapped up last weekend on the positive news regarding the aid for the Spanish banks. So this was bullish for the euro. It gapped up higher through resistance, triggering a breakout. But the lack of follow-through, again, if you're a momentum trader, it's not really the breakout that's the key. It's the follow-through rally that gives the market the extra push it needs. And when you don't see that follow-through rally and you're a momentum trader, then it's always a good idea to perhaps exit your position and try to reset it, looking for the move back up. If you're a swing trader, then obviously you play these breakouts and you give yourself some room underneath previous bottoms. But if you're a momentum trader, you don't wait very long for the market to go against you before you pitch the trade. So when traders decided that the Spanish bank plan did not contain the detailed information they were looking for, such as how much money was going to be involved, who was going to give the money, when was it going to take place, things like that, traders immediately abandoned the strategy, sold off the euro, sold off gold, sold off crude oil and stock market. But they did stop in this support area here, now near the 124.44 area. And again, building this support base is a lot better than just these spikes and these quick turns in the marketplace. And they often say the height of the market is determined by the length of the base. So if you can get a strong support base like this, this is a sign that buyers are supporting the market. So I like this action here that we're getting, and it is possible we could see this market climb back up towards this target zone at 127.33. Now looking at the current patterns that we have developing in the market, take you up to date on where we're at. You can see that on the 14th, on the 60-minute chart, the euro already began to break out through this triangle formation on that positive news late in the day on Thursday. And now we're working up towards this target zone. We are approaching and almost touching the target zone at 126.49. So you have to do, because this news is positive and you are building a higher bottom formation and higher tops, is gauge the momentum as this market approaches this zone, because it is possible that we could break inside this zone. You don't want to cut the trade short because it hits a target. But if you are trading the target, then you're anticipating another pullback. If you are trading for more momentum, then you may want to take a look to see if momentum and rising volume comes in as the market begins to approach or enter this target zone over 126.49. So that's what we're looking at in the euro for Friday and to finish the week. Now the gold market on the 240-minute chart, this broke out of this pattern, again showing that there is a bias to the upside, and what we're trying to do is get this market to follow through. Now after this big candlestick, it may have exhausted some of the buying, so those markets move sideways. Well, buyers seem to be stepping in and are receptive to these dips. You can see these higher bottoms starting to form. Now we're just looking for that acceleration into that 1641 target zone. So again, this is a very good formation. If you extend this support line out here into the future, you can see that the market is still following along this support line, even though we have technically broken out to the upside. So gold is starting to get a bullish bias. And again, if the central banks intervene and the dollar weakens, gold may benefit by spiking to the upside. Now the crude oil market is still lagging behind the other commodity markets and the euro. Again, this volatility this week probably shook up a lot of traders, and now we're waiting for this support base to form, and we're starting to get the confirmation to the upside, and we're approaching a 98.37 area that could trigger an acceleration to the upside. You can see there's a lot of empty space in here. The market didn't spend a lot of time coming down these two moves, this third move here, so there's a lot of empty space up here. And if we can get this market to break out above here, establish support around this 98.37 area, it is possible it could comfortably begin to move higher. So overall this week we saw the market reacting to the news in Europe. It started out the week with the euro, gold, and crude oil showing bullish signs because of the new banking bailout program for the Spanish banking system. When that didn't come through as expected, the market sold off, and that should be expected because, again, traders are watching the news very carefully today, and they're not waiting around. If the news isn't favorable, they're out. So by the time the market reached Thursday's action, we had been trading sideways most of the week, and once this positive news and these rumors began to come out late Thursday, showing that there's going to be possible support from the central banks to help out the euro after these Greek elections, traders started to move back into the euro, into crude oil, and into gold. So these are the three markets we'll be watching tomorrow and over the weekend, because if the support does come in from the central banks as expected, all three markets should find support and should trade higher. And this has been James Hyercheck with the Autochartist Euro, Crude Oil, and Gold Report for Friday, June 15th.